Welcome to another S&P 500 analysis. This is the weekly edition, and today is July 23rd, 2023. We have the FOMC rate hike and the earning from more FANG stock this week. So will the market pivot from these events? The market upward march was interrupted by negative reaction from Netflix and Tesla earning last week. They triggered a tech stock sell-off, especially the large cap FANG stocks. This Wednesday, we'll get the latest interest rate hike, and the market is expecting another 25 basis points. I believe the market will not react to this hike too much in either direction, but will react more from Jay Powell press conference. If Jay Powell reaffirm another 25 basis point hike for the next meeting, I believe the market will react negatively to the statement, and if he hint on a pause as possible from the next meeting, then the market will likely take off. In addition to the rate hike this week, we'll also get earnings from Microsoft, Meta, and Google this week. The rate hike and earning from these three FANG stocks will certainly cause some increase in volatility. In this video, we'll look at the price action of the S&P 500 and the other major market indexes, the market sentiments, and the internals to see what they are telling us about the market going forward. Also, we'll look at the index ETFs such as the SPY, QQQ, the IWM, and also the gold, US dollar, silver, oil, and the 10-year bond. So stay tuned. Before we begin, let me tell you about the new addition in my Substack newsletter. Not only you will find additional contents from me, you will now get access to my daily trading plan for the S&P 500 ETF, the SPY. When you click on this trading plan, this trade plan tab, you will see the level and the target in my trade plan for the coming day. So go and check it out. It is completely free. Click on the link smtraderca.substack.com to see my plan for Monday. Now let's take a look at how the indexes have performed the last week. The Dow Jones Transportation is actually the top performer. It gained 405 points or 2.5%, and followed by the Dow Jones Industrial up 718 points or 2%. And the New York Stock Exchange Composite is up 248 points or 1.5%. And the Russell 2000 is up 29 points or 1.5%, while the S&P 500 up only 31 points or 0.7%. And the composite, the Nasdaq composite actually lost 81 points or 0.5% or so. And the Nasdaq 100 was the worst performer for the week. It lost 140 points or almost 1%. Looking at this weekly range of the S&P 500, we notice that the range have contracted down to less than 74 points. And it only gained somewhere around 31 points or so. And it finished the week with a shooting star type of a candle. It's still close above the 10 and the 40-week moving average, and still one time framing up. Looking at the sentiment, the VIX is still down at the 13 area. It's finished the week at 13.6, and the put-call ratio is sitting at 0.72. So the market participants are still complacent and risk on. We also see the up-down volume ratio was pretty much positive throughout the week except for Thursday. Slight positive divergence on Friday. We had a down Friday, but we have a positive up-down volume ratio of 1.08. And the daily advance decline also showed the advancer led the decline of most of the week, including Friday, with 5 more advancing stocks than declining stock. And the new high still outnumbered the new low. On Friday, it was 89 more new 52-week high than 52-week low. The cumulative AD line in the New York Stock Exchange is actually showing a slight positive divergence, so that could be a sign that we might see the S&P 500 to head higher. The Nasdaq also show a up-down volume ratio to be somewhat positive and showing a little bit of a divergence, positive divergence on Friday. The daily advance decline wasn't as bad as Thursday, although the Nasdaq 100 was down about 0.3% or so, or a quarter of a percent, but only 299 more declining issues than advancing issues. And in the Nasdaq market, although we got a sell-off on Thursday and Friday, started on Wednesday, but the new high, new low was positive throughout the entire week. So that's a positive sign for the Nasdaq. But this huge negative divergence between the cumulative AD line and the Nasdaq 100 still persists. And looking at the yield curve, the 10 versus 2, we're still seeing it pointing to a recession because it is down at minus 1.011. And the 10-year yield is still in the 3.75 range up here. So I wouldn't be surprised to see it move up to 3.9 after we get the latest FOMC announcement, if Jay Powell reaffirmed that we're going to get another 25 basis point in the September meeting. And here we see the dollar is back up at the 101 level. So if it could stay above this, then we could see it come up to this 102. But if it pushes back below this 101, then we could see it come back down to this area near the 100. And if we look at this future chart for the dollar, you see that it is sitting right at this lower edge of this balance area. So if it could stay above this 101, and we will see it possibly move up to this 102.5 or so, up at this at this high volume ledge here. Now, if it unable to get above this 180, then we could see it come back down and try to get into this balance area below 99.31. And for the crude oil, we see it continue to auction up, and we're expecting to see this 80-83 area to get tested. Silver came up to this composite point of control near 25.5 last week and got rejected. So if it could get above this composite point of control, get above 25.5, then we could see it move up possibly up to this 26.75 or 27 area. Now, if it get rejected and unable to get above the composite point of control, then we could see it work itself back down and possibly retest this 22.75 area and watch this trend line for potential support. And gold is continue to zigzag its way back up to this 2000 level. So be watching this 2000 area. If there's a pullback coming, then watch this 1950, 1940 area to see what it provides support. Now let's go and take a look at the indexes, starting with the S&P 500 on this daily chart here. You can see last week it formed a little bit of an evening star, so we'd be watching for the Thursday low to get taken out. Then we probably will see a little bit more downside based on this pattern here. It did peak above the upper range of last week's expected move, but it closed back inside the range. And here are the ranges for this week. For the upper range, we're expecting it between 4607.50 and 4593.70, and the lower range will be between 4479 and 4465. And here's what we're going to be watching next week. So if it could take out last week's high, this level here, somewhere 4578.43, then we'd be looking for this 4600 level in the upper range of the expected move. Now, if it dips below this Thursday low, then we'd be looking for a move back down to this 4512.90 and into this lower range area. And the Nasdaq 100, we saw a sell-off on Thursday after Netflix and Tesla's earning report. Now, before that, we saw it came up and tagged the upper range of the expected move. So with that post-earning sell-off, we actually saw the Nasdaq 100 close at the bottom third of the weekly range. And here's the upper range for this week. We're expecting to see between 15,870 and 15,764. And the lower range is between 15,087 and 15,010. So if the Nasdaq 100 continue to pull back, then we'd be looking for this 15,265 and the lower range as potential support area for the coming week. Now, if it bounces back up, then look for last week's high near the 15,932 and the pivot high at 16,017. And for the Russell 2000, last week, the Russell 2000 got close to 2,000, but shy of it, the high was 1990.25. So if the Russell 2000 reverse and move back up, then look for this 2,000 level potential pivot point and look for a pullback to a 1925 if we see the weakness, possibly due to the rate hike from the Fed, because that will likely dampen the small cap momentum. And here the Dow Jones Transportation finished the week with a outside bar, and that could be a sign of possible pullback. And if it does pull back, then we'd be looking at this 15,880 level here, essentially come down and fill this gap. If it continue to move up, then we look for the 16,600. The Dow Jones Industrial printed 10 consecutive updates and finished the week with a inside candle here. So if the momentum is continuing to move up next week, then watch this 35,514 level. But if it's decide to pull back, then look for this 34,400 area, possibly come down and fill this small gap here at the 34,277. And the New York Stock Exchange Composite Index also shows some strength, and it moved above the 16,200 last week. So right now for the upside pivot, we are looking at this 16,416 area here, this pivot high. And for the downside, we're looking for a pullback back down to this 16,000 level. Now let's take a look at the ETF for the indexes. Starting with the diamond, the ETF for the Dow Jones Industrial. You can see last week, it actually closed above the upper range of the weekly expected move, and it printed a inside bar. And this week's upper range is between 358 and 356.60, and the lower range is between 347.70 and 346.30. And if we look at this expanded chart here, you see that the price is inside of this balance area. So if it continue to move up, then we'll be watching for it to come up to this 355.42, this upper edge of this balance area, and then possibly move into the upper range. And the price come inside of this balance area here by breaking below 348.54. Then look for the lower range to get tagged and possibly move down to this 343.69, this edge here on the volume profile. And for the SPY, the ETF for the S&P 500, we saw it also peak above the upper range of the expected move on Wednesday prior to the Netflix and Tesla earnings. Then after that, we got a little bit of a sell-off, and on Friday, it printed an inside bar and closed inside of the weekly range. And for this week, the upper range is between 459.50 and 458, and the lower range is between 446.30 and 445. So for the coming week, if it could get above this 452, then look for the 456 level up here to get tagged and into the upper range. If it get above the Wednesday high, last week's high. Then on the downward side, we'll be looking at the possibility of coming down to this 448 level here if it breaks the 451. Now, if you want to see my trading plan in a little bit more detail, go visit my Substack newsletter. The link is in the description below. And for the QQQ, the ETF for the NASDAQ 100, we noticed that it also tagged the upper range of the expected move prior to Netflix and Tesla's earnings. Then afterward, it sold off and came down to this lower edge of the volume profile, or a balance area, somewhere near this 375.56. And here are the ranges for this week. The upper range is expected to be between 386.50 and 384.10. And the lower range is 367.20 and 365.50. And if we take a look at this composite volume profile, we see the price is sitting right at this lower edge of this balance area. And if it breaks this edge here beneath the 375.56, then look for the lower range to get tagged and possibly work itself down to this 357.48, or the edge of the next potential balance area. And for the upside, if it could stay inside of this balance area, then look for a bounce back up toward the upper range of the expected move. And finally, for the Russell 2000 ETF, the IWM, we noticed that it also closed just right below the upper range of the expected move. So it closed back inside of the weekly range after it had moved above the upper range. And this week's upper range is between 199.40 and 198.30, and the lower range is between 190.60 and 189.60. And look at this chart here, we notice that the price had come into this balance area here. So if it continue to pull back, then look for this level here, somewhere around 191 to get tagged, and then possibly get into the lower range of the expected move. Now, if it could get above this 195.30, in other words, get back into this balance area, then we could see the possibility of taking out the Wednesday high and move up to the upper range of this weekly expected move. In summary, the market finally started to show some sign of the changing characters. The first two FANG stock, Netflix and Tesla, gave the market an excuse to take some profit. This week, the market will face a couple pivotal moments: the FOMC forward statement and the next three FANG stock earning report. I believe the direction resulted from these events will determine the next major move for the next few months. The Dow Jones Industrial is only less than 5% from its all-time high, and the S&P 500 is less than 6% from its all-time high. I have said when the New York Stock Exchange Composite made a new all-time high back in January 2022 that I have never seen the market top out with the New York Stock Exchange Composite making a new all-time high without another index accompanying it. And at that time, my guess is the next market top will be formed when the Dow Jones Industrial makes an all-time high by itself. So is this the pivotal point where we will see that happen? We'll see. Show your support by subscribing to my channel and my Substack newsletter if you'd like to see more of these contents from me. Smash the thumbs up to help promote my channel. Thank you for watching and good luck.